The first tab in the Sustainability ROI Workbook is for the Introduction worksheet. This title slide shows the overall content on that worksheet. So what we'll do is we'll work our way through it, and I'll add a little bit of color commentary to the text that is on the worksheet. At the top of the worksheet, it talks about the big three justifications. The big three justifications are the only justifications that are ever used by a company to do anything. In the case of a sustainability project, historically, these justifications have been viewed a little bit as sort of an either or as opposed to a both and kind of proposition. And there's been almost an assumed assumption that doing the right thing is going to be a trade-off to being able to be a more successful business. In the 21st century, though, it's becoming clear that if companies pay more attention to the environment and society, their reputation with important stakeholders like customers and employees and investors, and the innovation that's a result of those efforts is going to allow it to capture new opportunities and mitigate new risks. In other words, it's a trio now. It's a both and as opposed to an either or kind of thing. And the justification that we are putting forward in the business case that this workbook is going to be used to help you with uses this as the overall framework for the elements of the business case. Let's scroll down to the next section. This is the section that talks about how the features of the business case are going to be attractive to chief financial officers who are usually part of the decision-making team as to whether or not your project is going to be approved. CFOs get a lot of requests for money, for capital, and they have to have a way to compare and contrast projects with each other as to which is the best deal for the organization. Traditionally, the way they've done that is they have looked at the payback period, the internal rate of return, net present value, etc., those kinds of ratios associated with the project. And to do those calculations, they normally need to know what the project is going to allow the company to save, whether it's going to generate some more revenue, how much money or capital is needed in the first place, the capital expenditure, CapEx, and of course what the project is going to do, and are there risks associated with doing the project. And that's the way traditionally the projects that are being brought forward to a chief financial officer or people in finance are looked at to compare them and see which are the best. There's a lot of advice from accounting bodies that those are still useful in the 21st century, but we need to include a few things that weren't there before. So we still need the payback period, the internal rate of return, etc. But there are a few other things that are going to be helpful to add context to the business case. Is the project going to be helping the company fulfill its purpose? Is the project going to help it make progress on its ESG goals? ESG being a synonym for sustainability, environmental, social, and governance goals. And is this project going to be helpful in attaining those goals? How much revenue is it going to make and so on? But it also includes employee expense savings that might be potential benefits associated with this project. It might also have some ability to increase the value of the company's buildings, its equipment, its assets, or even its share price. And in addition to the risks of doing the project, what happens if the company does not do the project? Is it going to expose itself to some risks? So this is a more holistic group of potential areas that the deciders, the CFOs, need to look at. And the nice thing about the business case is it provides all of them. The next section looks at it from the point of view of the proposer to the CFO, the sustainability champion, the person that is wanting the project to be undertaken by the company. The first bullet here indicates that the workbook contains a superset of all of the potential benefits that might be possible from any sustainability-related project. In fact, it's got 25 potential benefits that may or may not be in play. So it starts off with that master list, and you can decide which ones are relevant for your project. The reason that that's kind of a nice thing to do is it helps condense or bridge this literacy gap between the people who understand sustainability and science and the people who are running the business. and the accountants. So there's a literacy gap between the sustainability folks and the business and accounting folks very often. And the language spoken by each of them is quite different. What the business case helps do is it takes all of the sustainability perspective about doing the right thing, and it shows the so what of that in terms of how the company can capture new opportunities and mitigate new risks, and helps the business people see the relevance, the materiality of all of the sustainability stuff to what they care about. So it helps to move the both sides of that chasm towards the middle. The sustainability literacy folks or literate folks become more comfortable with business jargon and vice versa. So one of the things that we are struggling with all the time as sustainability champions is the mindset of business people and making sure that they see the relevance to the business and to their objectives of undertaking more aggressive action on sustainability related issues. Let's just go back to the other bullets. There's lots of guidance baked into it on how to quantify the various benefits, examples of what other companies have been able to realize on some of these things, and there are little pop-up comments that come up and help you with that guidance. There's a complete set of sustainability goals that the company may be able to work in the right direction towards as a result of this project. The master list of the goals comes from the Future Fit Business Benchmark, which is a science-based, extremely complete set of goals that companies must or may reach in order to be able to be a more sustainable enterprise. It also does all of those ROI calculations, those things called return on investment, internal rate of return, net present value, payback period. Those calculations may not be familiar with a lot of sustainability champions, but the workbook does those calculations for them. And the last part is that it does a very thorough analysis of the risks of not doing the project. So this is not a neutral decision on the part of the company, and they need to understand the downside if they decided to take a pass on this project. And the workbook helps them do that. The next little section is about the 6 prerequisites that you need before you were able to take full advantage of the workbook. Of course, the first thing is you have to know something about sustainability, and we assume that you do because you're proposing a project that's relevant to it. That you have some level of comfort with Excel, how to get around the workbook. You don't need to know a lot about it, but if you need help, maybe you can find somebody in your organization that can provide help for you on Excel, people in finance maybe, which would be great because they also have some of the data that you may need. Sustainability initiative. We're going to be using an example in these series of videos of greening a headquarters building. In other words, making it a LEED standard headquarters building. So that's the initiative that we're going to be looking at. You need to have a description, costs associated with it, resources required, timing, the business need for it in the first place. So what is exactly that you're proposing, and how much is it going to cost, and does it apply to all of the company or just one or two of the parts of the company, locations for example? You need to have a specific company in mind, which locations are going to be impacted, what goals it already has relative to sustainability, and you need to have its data, which is really important. Baseline data on which you can show improvements, expenses today, so that you can show a % reduction on those expenses, or revenue today, so that you can show an improvement on that amount of revenue. So you need the baseline data, which leads us to the other one, the last one, which is the fact that you need to be able to make some assumptions about the improvements that are possible on the various line items for this company. There is some built-in just-in-time guidance in the comments that I referred to before, but the most important source of help on that is going to be people in the company who have responsibility for the parts of the business that are going to be affected. They probably own the data associated with those parts of the business, and they may be involved in the implementation of the project. So it's really important that you co-create the business case with them. And that's what the human factor figure is trying to portray, that that it's very important that you work with the people who own the data, and will have a role in implementing the project, assuming it's approved. Because if you don't, they're going to be kind of ticked off. Ticked off because maybe it's going to look like they should have come forward in the first place with this proposal on their own, and you're making them look bad. And if that happens, then they may make it very much their business to make sure the project doesn't work, or they'll second guess all of your assumptions or second guess all of your data. So you don't need that aggravation. So what you need to do is engage those data owners, engage the implementers. Some of them may even be part of the decision-making team, and make sure that you avoid turf wars between you and them and any bruised egos. This is really the important point, that the art of the business case process, all of this engagement, is more important than the accuracy of the numbers. You want these people to co-create it to add credibility to the business case so that they co-propose it and they co-own it and co-implement it. This is a joint kind of effort. And if these folks sense that you're trying to be a hero and recommend something that maybe they could have or should have recommended before, then that's not a good dynamic. So you want to avoid that. The next section is the need for business action. I'm not going to go through all of that. I'll let you read that at your leisure. But it builds up to the fact that there are 5 kinds of sustainability initiatives or projects that the company might undertake. And this workbook is going to be usable for any of them. So it's a universal way of justifying a sustainability related project. And finally, let's take a look at the legend. There's a fair amount of color used in the worksheets, and it's intentional. It helps you understand especially which are the cells that you need to fill in. So the white cells are the ones that you need to fill in with data and assumptions, and the yellow cells are the baseline data, the current company data. So when you're talking about improvements on something, improving revenue or saving money, saving on what? Improving on what? So you need the baseline data. That's where the help of your colleagues is going to be important. And the color coding of the cells helps you visually recognize fairly quickly which cells require company data and which cells require your input. So that's a quick overview of the context for the business case, the justifications, why it's framed in a way that's going to be useful both for the proposers as well as the decision makers, what you need to be able to use it effectively, and especially the help of your colleagues, why businesses are a bit more ready these days for sustainability initiatives than they were in the past, and how to identify the cells that require your attention significantly. Now we're going to take a look at the components of the workbook in more detail, and we'll start off with the overview worksheet, which we'll look at next.